Good morning, friends. Welcome to the morning podcast with me, Sudeep Shah. In today's podcast, we would be discussing about what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We will also be discussing on key sectors and stocks that we should be focusing on for the day as well as for the next few sessions. Now, if we look at it from a price action perspective, the markets yesterday experienced its largest single day decline since October 26th on account of profit booking by FIIs before Christmas in the cash segment, and also due to the worries arising on account of Kerala's COVID-19 situation that is just emerging. Now, the severity of the profit booking yesterday was such that while Nifty and Bank Nifty ended 1.2% negative apiece, it was the mid cap and the small cap side of the business that were hit hard, which lost over 3.5% apiece. Like, while nothing has changed much on account of the global coordinates that we generally track, which is the dollar index, which is closer to 102.50, as well as the long term US 10-year bond yields, which are comfortably trading below 3.9. So what has changed now? It is the Brent crude oil prices that have experienced an considerable increase over 8-9% from its recent lows on account of the supply constraints that have emerged due to the security reasons arising while shipping via the Red Sea route. So this indicates mixed sentiments from an Indian market perspective. While you see the US markets, especially S&P, which after an uninterrupted move from 4550 to 4750 has witnessed profit booking from higher levels to the tune of 1.5% yesterday, and we feel that it could slide into a period of consolidation now, with a lot of indicators reaching overbought zone there. So from a next few sessions perspective, we feel that S&P 500 could consolidate between 4600 and 4750, thereby meaning that a lot of the emerging markets as well as the other markets could consolidate during the same period. Coming to Nifty, now if we see last few sessions, we have discussed about India VIX, which was signaling a cautious approach at higher levels in Nifty. So while Nifty was sustaining around 21,400, 21,350 kind of zone, we were seeing VIX rising from 12.5 to almost 14.7 levels. So that had already indicated some kind of a caution, and we had already pointed this out in the last 2 or 3 days early morning podcasts. Now, going forward, the immediate resistance from a Nifty standpoint is placed in the zone of 21,280 to 21,330 zone, while the nearest support now is at 21,000 on the downside, between 21,000 and 20,970 zone. Now, in case we see Nifty breaching this zone of 20,970, the index could retest the levels of 20,800, 20,750 zone, where the 20-day exponential moving average is placed. In case now, from a reversal perspective, if we need to track Nifty needs to cross and close about 21,330 for it to retest or reclaim the zone of 21,450, 21,500 levels. So the most important levels from today's perspective would be, first level would be 21,000 or 20,970 on the downside, and on the upside the most important level would be 21,280 to 21,330 zone, which can act as a resistance. And believe me, friends, it could be a volatile day and it could be choppy moves either side. So now in coming to reasons, now a lot of reasons yesterday were attributed to the fall, but we feel that it's mostly due to the overbought nature of the indices and the rally being too much overstretched in mid caps and small caps, and here we have seen some kind of a froth reduce, and we feel it's healthy from a market perspective that the market enters into a period of consolidation, rebuilds its momentum and then moves on the way up. So positionally, the support for Nifty is around 20,750 to 20,850 zone. And it would be extremely important to remain stock specific in structurally good stock stories rather than chasing those small caps or mid caps which have risen multi-fold in the last few months. Coming to the open interest data interpretation, now significant call writing buildup is visible in 21,100 strikes as well as 21,150 strikes, while on the puts front 21,000 and 20,900 strikes have witnessed considerable open interest additions. Overall range for the day could be 20,900 on the downside and 21,280 on the upside. Now, coming to the bank nifty levels, going forward, the 13-day exponential moving average zone of 46,900, 47,000 zone is likely to act as a steady support. On the upside, the resistance could be witnessed at 47,700, 47,750 zone. In case we see bank nifty crossing and sustaining above 47,750 zone, index could continue its rebound move up to 48,000, 48,100. In the event of this downside level of 46,900, which is the 13-day exponential moving average being broken, the next supports are placed around 46,450. From a monthly expiries perspective, significant open interest buildup is witnessed in 47,300, 47,200 and 47,000 puts, while on the upside 47,500 calls have witnessed aggressive buildup. So the near term range that we feel for the banking index would be 46,900 on the downside to 47,750 on the ups. Now let us just see what sectors and stocks are in momentum still after yesterday's brutal fall. So oil related stocks such as ONGC and Oil India look still promising, look still good, and they have gained yesterday in an overall selling environment. FMCG sector being the defensive one, we saw buying emerging in Tata Consumer, Britannia, Varun Beverages. Although the buying was still not convincing, but it is still better than all the other stocks in the current scenario. From a broader market perspective, bullish setups were observed in AU Small Finance Bank, Voltas, Gujarat Fluorochem, Kalyan Jewelers, and a few more. Now, friends, coming to the FII and the DII data, in the cash segment yesterday, FII sold to the tune of 1322 crores, while DIIs bought to the tune of 4750 crores. FII's long short ratio surprisingly yesterday improved from an index futures perspective to 65% as they added 20,000 index futures longs. Now, this is surprising looking at the fall that we have seen in the markets, and we'll come to it in a bit. On the stock futures front, FIIs have bought to the tune of 87,000 contracts. So again, another surprise in a falling market. And on the options front, FIIs have sold closer to 1.3 lakh call contracts, and they have even sold 1.3 lakh put option contracts. So that this implies that post this yesterday's fall, FIIs expect the volatility now to some reduce some bit, and that is the reason they would have sold both calls and puts uh, from an index options perspective. Now, except this selling in cash segment by FIIs, the data is not hinting at any negative sentiment, and hence we need to be very watchful of the data, incoming data in the next few days to ascertain whether yesterday's fall was a temporary one or there is still something more than what meets the eye. So let's keep our fingers crossed, and we'll keep you updated regarding the data. So friends, that's all for today. Thank you all for regularly listening to our podcast, and wishing you all an energetic day ahead. Do tune in for more market related updates and insights. Thank you all.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.